Hello Bitcoiners, my name is Rossawan and I'm the founder of Bitcoin University Thailand. Our aim is to deliver news and updates as well as educate people on Bitcoin and cryptocurrency investment. In recent months, the cryptocurrency has been dull and not so exciting to trade as last year. A lot of investors are confused about the price directions. Many gurus are saying different things and using different theories. I myself study different theories, both technical and fundamental, but in today's video, I'd like to talk about the Bitcoin price forecast based on the Elliott Wave Theory. I have a cold, so please bear with me. I might be coughing from time to time. So let's move on. One of the reasons we suspect the decline in price of Bitcoin is the lack of government regulations, which could be a key factor behind the massive growth in Bitcoin and other cryptocurrencies back in year 2017. Back then, the total market cap reached as high as $600 billion at the end of last year. After that, the explosion in value has intensified the spotlight on Bitcoin, as well as drawing attention from regulators around the world, especially in Asia. And on top of that, there were many price manipulations, hacking attacks, and fraud. So if you see in the graph here, you see that a lot of given that the crypto market is driven by emotions and speculative demand, any policy changes will impact the short-term price directions. Look at this, for example. The prices have gone down 11.9% after South Korea announced to ban trading of cryptocurrency, for example. Bitcoin alone fell by around 65% to $6,740 as of today, translating into a decline of about 70% in total market cap after peaking at $19,300 in December last year. People might think that these regulations are hampering the growth of Bitcoin, but we believe that these regulations could lead to a more stable price, a more stable market in the future. So I personally think that these price corrections are an inevitable measure before we see a stable crypto market. And our research team has also studied many price analyses conducted by a number of institutions, but in this video I'm going to review the analysis of SPEEDA on the Elliott Wave Theory. SPEEDA is an Asia-focused industry research house that places strong emphasis on ASEAN, especially Japan. And when we talk about Bitcoin and cryptocurrencies, Japan has always secured the top position as a globally leading crypto market. According to SPEEDA, Japan accounts for about 75% of all currencies traded into Bitcoin as of July 2018. So if you see these pie charts here, you see that Japanese yen continues to be the most traded national currency for Bitcoin, accounting for 75.1% as of July 2018, followed by USD at around 17.8% as opposed to last year, September 2017, where Japanese yen only accounted for about half of the traded currency for Bitcoin, while USD accounted for about 30% roughly. Alright, mounting pressure from government regulations has certainly obstructed the global cryptocurrency market growth. As we all know, the market value fell by around 56% year to date in July 2018 to about $250 billion after growing about 34 times in last year in 2017. So the Bitcoin transaction value multiple, the TV multiple, which is the ratio of Bitcoin market cap to its daily transaction value, has averaged around 120 times during its declining phase. And interesting enough, there was less than 1% of the overall Bitcoin that was actively used for transactions. The currency has traded at a transaction value multiple of 50 to 70 times during these boom cycles, with about 2% of wealth transacted daily. The TV multiple exceeded 100 times here during the post-boom period. This means the recent decline in Bitcoin prices is due to lack of transaction demand, which is affected by, of course, the pressures from the governments around the world. So you know now that the Bitcoin value is heavily tied to speculation and emotions. SPEEDA says around 70% of Bitcoin price reaction is driven by speculators. However, the long-term impact is slightly softer, as many new regulations are only months old and could even lead to a more stable market in the future. You have to remember that, because we are going to analyze using the Elliott Wave Theory, please remember that the Elliott Wave Theory is based on the notions that cycles are repetitive and that short-run cycles are essentially fractals of the long-run cycles. The theory proposes a cycle of 8 long-run waves, 1, 2, 3, 4, 5, 6, 7, 8. 5 short-run waves within the long-run wave, 1, 2, 3, 4, 5. These 5 short-run waves form one long-run wave. For example, 1, 2, 3, 4, 5. Another 5 short-run waves form one long-run wave, for example. The analysis indicates that Bitcoin prices, this is the table that shows the result of the Elliott Wave analysis. It indicates that Bitcoin prices could reach $6,911 by December 2018, which is down by about 64% from its peak, and this is in wave 2. So we will know from this table that wave 2 is ending soon, around December 2018. And based on the Elliott Wave Theory, Bitcoin is placed closer to $112,000 in wave 3 by September 2020, indicating approximately 16 times growth over the next 2 years. Assuming a TV multiple of 50 to 70 times, which is the historical TV multiple during the boom cycle, of course, and daily transaction value CAGR of about 80% to 100%, which is in line with the historical CAGR, Bitcoin prices should reach around $73,000 to $137,000 over the next 2 years. So SPEEDA believes that this price target is achievable over the medium term once the market corrects itself from the temporary decline caused by regulations by the authorities. If you look at the long run cycle, you see that the Elliott Wave Theory places Bitcoin prices closer to $1.879 million by July 2037, which SPEEDA thinks is unrealistic. I also think it's a little bit unrealistic, because the reason they think it's unrealistic is because the limitation of the model is based only on a single short-run wave rather than on an average fractal multiples of several short-run waves. So if we use a longer time period and multiple short-run waves, it will make the numbers look a little bit more realistic. Well, I agree with them that it's a bit unrealistic, but I hope I'm wrong. So this is the price forecast in different waves. You can see that the wave 1 peaked at $19,000, and the end of wave 2 is coming soon at around 6,900. It may not be the last price, but it will be the average price of this period right now, before rising up to peak at around $112,000 in wave 3, before declining to as low as $3,620 in wave 4. And well, it hasn't shown wave 5 here, but wave 5 should or moon up to $1.8 million per Bitcoin. But keep in mind that this is only based on the Elliott Wave Theory and excludes all externalities. So of course we shouldn't be relying on one theory alone. There are also many other theories that we have to take into account when we do price forecast. But today I'm just going to talk about the Elliott Wave Theory. Alright, this table shows capacity bottlenecks hindering mass adoption of Bitcoin. The target group of this data gathering represents 16.4% of the global population, and it excludes people without internet access, and it also excludes people in the age of 0 to 14 years old and people who are above 65 years old. So in short, it excludes those that has no internet and the young and the elderly. As of July 2018, there were about 21.7 million Bitcoin addresses across the globe, as opposed to 15.8 million Bitcoin addresses as of year 2017. There's no data for year 2030, 2041, and 2050 yet, but it's already increased by 50% over a year. So I can suspect, or I can predict that the number would be quite exponential over the next decades. And this Bitcoin addresses is only under the assumption that one address holds only one Bitcoin. Excuse me. Although this seems like a highly conservative number, because one person usually owns more than one Bitcoin address, because I myself own at least 10 Bitcoin addresses, and I think we all should diversify our portfolio and also our wallets. So it is better that we have more than one Bitcoin address anyway. And so this is just based on one Bitcoin address per person, and the number is already 21.7 million as of July 2018. So it is estimated that about 25% of Bitcoin mined, it has so far been lost as well during the improper handling and storage by Bitcoin owners. So adding that one person should have more than one Bitcoin address, and a lot of Bitcoins have been lost during the improper handling and storage. This significantly lowers the number of addresses to around 16.3 million Bitcoin addresses according to SPEEDA. Bitcoin addresses holding more than one Bitcoin accounted for around just 3% of total Bitcoin addresses, and the number of Bitcoin addresses holding less than one Bitcoin therefore amounted to approximately 15.8 million as of July 2018. And all this calculation indicates that a Bitcoin adoption rate is around 1.3%. So on this last slide, as per SPEEDA's analysis, the target group for Bitcoin should reach 2.4 billion people in year 2041, which is the year Bitcoin supply is estimated to peak, which we think is nowhere near mass adoption yet. So, although the spotlight on Bitcoin has been huge, it is believed that Bitcoin will not enter mass adoption anytime soon as a medium of exchange because the price is too volatile, and not to mention the high costs associated with transactions. So it makes sense to speculate that the speculators would rather trade rather than use it as an everyday payment option. So you can keep it as an investment option, but maybe not as a currency to pay for goods and services. So personally, I think this is not a financial advice, but I think keeping generating fiat is also a good idea. Fiat won't go away anytime soon, and we'll keep hodling until wave 3 and see how it goes. All right, thanks very much for watching, and we'll see you in the next video. Bye.